Okay, we move right along with our third panel, so you don't need me to introduce myself again, but I will introduce my panelists. And they are Conrad Ford, Chief Product and Strategy Officer at Allica Bank. Susana Ponce Froment, Global Head Financial and Credit Risk at Tide Bank. And Susana is under some... No, don't sit there, they will think you're Rajesh. And speaking of Rajesh, Mirjankar, Managing Director and CEO at Kiya.ai. And finally, Sahil Thapa, formerly Chief Technology Officer at Recognized Bank. Susana is under some time pressure and may have to run off before the ending of our session. So I'm going to start with you, if I may, Susana. How can AI help reshape financial and credit risk assessment? Can it?
Yeah, definitely it can. So as in credit and financial risk, what is important for the banks is, and for also the fintech companies, is to understand, especially in the credit area, to understand the credit worthiness of the customer, and also, understand whether or not the products that are being launched, the credit products that are being launched, actually will enable us to meet the customer expectations in terms of financial needs, and also recover the funds that we are lending to the customer. So definitely AI in machine learning AI models, as many of you are aware, are very useful for the credit functions to automate the underwriting processes for to decide who should be getting those loans in terms of credit worthiness, how much they should be getting, and the pricing that we should be allocating to those loans. So for many, in the case of Tide, for example, we have automated the end-to-end underwriting process for loans, for the loans that we provide. We provide transactional credit to our customers. And this transactional credit provides payments which are embedded, or loans which are embedded in the payments journey of the customer. And how we automated it is the underwriting processes is by using like a scorecard first, and then we have some ML models, and we have been also calibrating those models to enable us to ensure that the output is accurate. So to your question, the answer is yes, definitely. The financial institutions, banks, and also the fintech companies can use AI and ML and machine learning to automate the underwriting, and also the considerations to take. It's not, this is from the business perspective. It's great because the end-to-end journey becomes really smooth for the customer without, for example, many hurdles. Is a simplified journey to get a loan, but also we have to, from a risk management perspective, we have to consider whether or not the models that are being developed actually are transparent, can be explained, because we have to think about the regulation, the regulatory environment. So we have to make sure that those models can be explained in terms of understanding why a decision, a credit decision has been taken. We have to determine whether or not the models are compliant with the conduct rules, ensuring that the models are not discriminating customers, for example. They are not taking data points that might discriminate the customers, and also ensuring that the models that could be created can be documented, or are actually documented to enable the ongoing monitoring of some models, QC, quality control, for example, and in documentation, is also used by the credit teams, from credit risk teams, to monitor the performance of the models and to enable the calibration of those.
Thank you, Susana. Conrad, if I can turn to you, I've seen you perform at events like this before, where you were virtually throwing rocks at the audience and at some of your fellow panelists. So please don't do that this time. The first thing,
I'll try to not to be too rude.
So how are you, at Allica, how are you using AI?
Yeah, for those that don't know, Allica is a fintech bank focused on SMEs, but typically larger SMEs, the kind of the M in the SME, which is we see as underserved both by the incumbent banks, but also by fintech so far. We're 5 years in. We've just passed our 5-year birthday as a bank. So my kind of starting statement would be, we just passed our 5-year anniversary as a bank, and it kind of feels the first 5 years we were the challenger. And it kind of feels, because of the rate of change that's going on in the industry at the moment and the wider world, we're going to be the challenger for the next 5 years. And that's a scary thought, right? Because it's a completely different mindset that we need to adopt. And why do I think we're going to be the challenged? We're seeing examples happening now in our segment where people are doing things fundamentally differently using AI. It tends to be the earlier stage companies. They tend to be more advanced in their adoption, obviously less defensive, less downsides, and it's making us ask ourselves some difficult questions. So I see kind of 3 waves of how we need to address AI as a challenge and opportunity. So the first wave, we're kind of coming to the tail end, and that's individual worker productivity. The most obvious example that we'll all know is software development. I'm sure everyone's software development teams, internally or externally, have kind of like made huge productivity strides with Copilot type tools. We're kind of coming to the end of that phase. I think we've done a reasonably good job of staying up to date and staying at the front of that wave. So the focus at the moment is basically those that haven't crossed the chasm in terms of usage. What do we do about that? Because they've had plenty of time. I'd say we're now deep into the second wave. And the second wave is less focused on individuals' productivity. It's more focused on process optimization. And in our world of SME banking, it's less digital than people tend to realise. And to the extent it digitalised, it kind of digitalised onto PDFs. So when we think about digitalisation, we probably automatically think APIs. Our world digitalised onto PDFs. People stopped sending each other letters and faxes and doing wet signatures. They started doing it on PDF and e-signature. And that's obviously a major productivity gain from what was happening before. The reality is it remains very inefficient. And by the way, PDF I think is a perfect use case for the current level of capability of AI, of generative AI. So our investment at the moment, our focus
is a perfect use case for the current level of capability among a lot of bankers, let's be honest.
Yeah, that's true, yeah. So at the moment we're kind of focused on that. I think we're not as advanced as we need to be at this point in time. I think we've had a bit of a wake-up call on that one in the first half. I think we're really going to accelerate efforts there. But basically, a lot of wasted time, a lot of wasted calories on reading PDFs, consuming PDFs, creating PDFs. This is a perfect use case for the current level of capability of the technology. Very often people say it's not 100% accurate, but neither are our people either, so they just need to be better than our people. So our kind of current focus, I'd say, is on process optimization. The next wave, where we're just at the start of the journey, is how do you rethink how banking should work? And my kind of soundbite there would be an intelligent bank. So one of the characteristics of our customers and mid-sized business is that they're big enough that their needs are quite complex, but they're not big enough they can afford a CFO or a treasurer, right? So what about a bank that thinks it looks like their in-house treasurer, suggests things, prompts things, tells them they might struggle with payroll in 2 months' time, tells them that they should put some of this money aside and earn interest for the tax payment in 6 months' time. So a new type of intelligent bank, that's the kind of reinvention that we're looking for around AI, but we're at the start of that journey, not in it.
Which brings me to the purveyor of the solutions you may require. Rajesh, as the software solution provider on the panel, what are the top 3 most transformative AI innovations across the front and middle office layers that you see, that you
panelists speaking before you, and you just pick up things from what you said and answer that, and you got your answer. So I'll pick up from what Lok said earlier in the panel, where it's about the lack of communication between the client and the bank that's happened owing to digital banking. And I think there's a bridge that's taken things too far on that front as you progress with digital banking. And that's a bridge I truly feel that AI can, sort of shorten and bring the customer more closer to the bank. And the reason I say that is that when we look at mobile banking per se, it was one where you use the mobile of the customer to provide banking as an app on theirs. Just reimagine that with AI, and you realize that for the bank to get intelligent with their own AI is not going to be sufficient for providing AI-based banking. Because the end client, if it's a large corporate, if it's an ultra high net worth customer, or if it is probably even a Gen Z or the Gen A coming up now, they would not trust the bank's AI because it is biased to make profits for the bank first. It would provide services in a great manner, but it would make profits for them first, and probably not the best product. And so there is a little bit of reimagination there to use, where you have to then interact with the client's AI. So there is a need for now respecting client intelligence, because the client knows their business better than anybody else. And I think Ms. Elliott mentioned this point as well about the statements, right, or the cash flow forecast. There's nobody else who can forecast their cash flows better than the client. So what's the bank doing? If I were to reimagine that, then it talks about AI talking to AI. I think David mentioned this earlier as well, that there is a framework that needs to come up in the front end where you respect the customer's intelligence, embed that, and respond. And so it takes about 3 building blocks. The first building block was transact, which the banks do wonderfully well. The other building block was communicate, and I think that's where the communication was better done by fintechs, who were able to exactly ask the question, what do you want? So while banks said, we know banking, we'll tell you what to do, the fintech said, let me know what you want, and then provided that. But there is a third missing element which I think AI can bridge, which is the negotiate. Where if you had an AI agent talking to an AI agent, I would be able to say that I will provide a almost marketplace which is running through me to then interact with you to service the product and also provide the best rates for you. So that is one thing I think will be transformational from the front end part. The second bit on the front end is going to be interactions that you have with clients with generative AI, which will be more communicative, more collaborative, and understanding the context of the conversation. From moving from the front end to the mid office, I think there's an opportunity there to look at, already work being done on the credit risk, as Susana mentioned, in terms of credit risk assessment, as well as on the assessment for risk management. A lot of work is already done, and I think there's an opportunity with the whole lot of alternate data sources that we have, such as transactions and other data, that you can use to now give intelligence to external systems. There was a question earlier that we discussed saying, what's the commercial model of banks going forward? And I think data monetization is certainly a data model going forward. Banks can make money with the data that they have by still managing the regulations of data privacy, but really giving data of that customer by the customer's consent for money because you analyzed it. And the lastly, I think, from a perspective of compliance and fraud management, that's certainly an area where you can use AI in a much better way. But importantly, I think AI will transform itself in the use of explainable AI in a different way, where you can have aspects like why was the AI used and how was it used and what were the data elements, and build a respect for AI with auditability that brings it to a platform where it's acceptable by the regulator.
Well, we're talking about data, which brings me to Sahil, way at the other end. Just to make you out. But what I want to ask you, Sahil, how has data architecture got to evolve to support enterprise-wide AI transformation? We're moving from concept, proof of concepts, to production. What's the evolution?
So Robert, that's a very relevant question, and I sort of just want to touch upon the point that Conrad raised, right? Challengers feeling they're actually being challenged right now. That's because there's a lot of rebaselining that's happening around expectations on how financial institutes need to not only manage their back office tasks, manage their processes, and manage their customer engagement layer, right? Those are the three ways Conrad touched upon. And that being challenged is not just happening from new startup players or fintechs. You'll be surprised, some of the larger players are also sort of reimagining how they can make the most of what AI has to offer, right? That being, and some of these trends you can also see, infer from some of the talent scouting that's happening on the street right now. You will see a large demand across industries for AI and data leaders happening, specifically as enterprises look from a proof of concept on AI ML sort of topics into production-ready scalable workloads, right? From a data architectural perspective, as enterprises take up AI transformation journeys, I think there's this, you really need to kind of abstract out and look at a 3-point framework, right? At least in my head, it kind of translates into one, how well do you know your requirements, right? And when I say requirements, it's much more sort of in terms of requirements that you have as an enterprise on your data and model lifecycle management, right? These are topics that are a little abstract from how product typically gets defined, but you need to have clarity on how these life cycles need to be managed, right? This is number one. Number two pillar is, whenever you are designing an architecture, you need to stay true and core to certain design principles. If you look at most modern cloud-based architectures, there are some core pillars you will hear about, right? How are those architectures built upon? And different enterprises and their control functions will have their own variants on what they mean by core design principles. But typically they translate into these 6 points, right? Is your architecture secure? Is it reliable? Is it cost optimized? Is it delivering on performance objectives? Is it sustainable? And is it promoting operational excellence, right? Different enterprises might have a variant of these points, but what you want to be able to do is translate them into what does that mean for me when I'm designing that architecture, right? Point number 3, as you look at developing and designing this architecture, you really need to, and I can't stress this point enough, is your organization ready, right? This is not just purely like a talent and a skill set problem, but also translates into your ways of working. Are you able to deliver change that allows you to make an AI transformation journey successful? You are able to derive the value that you attributed when you kickstarted the project, right? So having a very tidy and clear understanding and having an organizational operating model that supports this kind of delivery is fundamental to creating a data architecture that can support an AI transformation journey. Now on to much more tangibles, right? There are some industry accepted data architectures already out there, larger organizations which have a whole lot of different data domains within their enterprise, adopt data architectures like a data mesh, right? Data mesh typically operates in a decentralized format. Different data domains will have their own ownership of the data and will create the rules around how that data interacts with different data within the enterprises. Smaller organizations, let's say likes of recognized bank or Allica, where the density of data domains is not as much as, let's say, a JP Morgan, for example, they would typically fall back to a data architecture, somewhat of the likes of a data lake house, which is for the more technically minded. It's much more of a data lake, but with a layer of knowledge graph that's put on top of this data lake, right? Which allows for easy consumption of your AI ML models from data sources that can be very different in formats, can be structured, unstructured, can be high volume data. So these kind of architectures are already out there, but what fits best for your organization is an exercise you need to undertake yourselves, taking all the stakeholders along, making sure their requirements are first understood, they are accepted by entire stakeholder matrix, and they work alongside with you when you go about designing and architecting this kind of data architecture, right? The good news here is, at least at a logical level, when you're deciding coming up with a data architecture, things haven't changed much, right? Like, you still care about data ingestion, you still care about how do you store it, you still care about how do you process it, then you obviously care about how does it get consumed, and then eventually how does it get serviced. Where innovation has been happening is how do these logical layers interact with each other, right? We've started talking about a lot about streaming data. We've started talking a lot about PDFs, unstructured data in the form of chats and voice notes, and customer and end user expectations on how they want to engage with machines and computers and applications is evolving very quickly, right? And that behavior is very sticky. It's going to be very hard to move away your customers from, uploading PDFs or giving you images, for example, to a different way of working. It's a changing behavior. So you have to create tools and applications that allow you to consume that data, push that through your logical and data architecture layers, physical layer, and then derive inferences that then feed into use cases that you need to solve for. So kind of taking that high-level approach to start with, ensuring you understand requirements, make sure your architecture is embedded in strong design principles, and thirdly, making sure your organizational is ready to embark on a AI transformation journey. Those would be the key pillars I'd call out.
Thank you, Sahil. I'm conscious that Susana is under some time pressure to leave us. I'm going to ask you what... Oh, you're okay. Okay. In that case, I would expect a longer answer than the one I was about to suggest. But what's the one technology or use case in banking that you would be putting your money on? And I'm going to ask this to everybody on the panel, but we'll start with you, Susana, in case you get carried away and we do have to lose you mid-answer.
Okay, so for me it will be AI agents, agentic AI. I think, in the future of banking, I see agentic AI facilitating the many tasks that both the first line of defense, so the teams, building businesses and building new products, their activities, and those teams that are also talking to the clients, like member support. Like agentic AI will facilitate their day-to-day job and will enable the automation of activities that they are performing. For example, speaking with the members, the customers, regarding complaints, for example, or questions they have about the products. Also, the product teams, they could use agentic AI or even like many tools that are available right now in Gen.ai to generate like new products ideas, to build new products automatically, and Rajesh will speak about that later. I think from a risk management perspective, I think agentic AI will enable the credit, financial risk, information security teams, all those teams belonging to the second line of defense, to actually have automated monitoring. For example, in our case in credit, an agent can be built in the future to enable the monitoring of the changes in the payment behavior, for example, of the customer base. When you have millions of customers, like that layer of monitoring of the performance can be built in and identify any material changes, for example, in the sales, in the revenue of the companies, material changes in the status of the company, for example, going from active to to a status where it's inactive, or in the breach of bankruptcy, for example, understanding changes in the needs of those customers. For example, if the sales, the revenue is increasing, probably that customer will need a new type of loan. Maybe that customer will need to buy a new machinery or to more working capital. So identifying those things proactively to enable the credit risk teams to supervise automatically or monitor automatically the creditworthiness of that customer and red flags, but as well enabling the first line of defense or the product teams to identify the new needs of the customer. And from for example, from a financial risk perspective, those agentic AI can help in forecasting for example, automation of forecasting, identify red flags that will be affecting, for example, the assets of a company, the liabilities of the company, like the income, like any of the lines in the income statement, accruals. So it's very, very important for a risk team to identify, for example, red flags on a timely basis. And usually what happens is that, like in a smaller organization, SMEs, for example, they wouldn't have the time or the expertise to identify those changes quickly. So like by providing agentic AI solutions, I think it will help them, help the small business owners and middle-sized business owners as well, to identify changes, material changes in the financials, material changes in revenue, and in their, for example, credit needs, so they can take timely actions. So for me, that's the future of banking and how we can also help our customers.
And Conrad, do you agree? What's the tech or the use case that you bet big on?
Yeah, I mean, firstly, I would agree with what you say, but I would actually do something different, not because you're wrong, but because I think you're right. So that I'm a serial fintech founder, and
We forgive you.
if I woke up tomorrow and my time at Allica was done for whatever reason, I think I would found in stable coins. Now, I would be trying to build an AI native or an AI first business. So to be clear, I think AI is super important, but I personally think that we are an inflection point in the market. Let me just characterize the last decade of fintech, or the decade plus that we've now had of the fintech is a good word. I think we are just entering the third wave of fintech. Wave one, I would call lipstick on a pig. So basically, we had lots of really cool apps and UX, reinvention of UX around mobile, around other digital, but fundamentally the underlying infrastructure on which it's all built is rotten. I've been digging quite deep into payments recently, and the number of beats there are to feed along the way, and broken processes and dysfunction that goes on is really good. Reconciliations is really quite extraordinary. I pity anyone in payments. Second phase was the opening up of data that kind of just began to mix up the competitive landscape again a bit. Open banking being the classic example, particularly in Europe, which is mandated. In other words, opening up the data so that there's more choice and there's more competition in the market. A bit more fundamental, but not very fundamental, because it's still got rotten foundations. Still a bit of lipstick on a pig. I think we are just entering the phase where the infrastructure gets rebuilt. And this is going to be absolutely profound. I think this is the bit at which the incumbent players are in deep, that's it, big word, deep something, because the entire infrastructure and foundations of financial services or banking, so not insurance, are going to get rebuilt. And I think if you look at DeFi, and I have to say I've been a DeFi cynic for quite some time, but there's a Hemingway quote about somebody going bankrupt, and he says it happens gradually, then suddenly. DeFi has happened gradually, and it's now suddenly. It's happening right now. We now have all the component pieces for, firstly, payments to be rebuilt. Immutable 24/7 payments between anyone, anywhere in the world. All of that infrastructure now exists and is technically possible. In fact, it is possible. It's happening now. It's happening at the moment, the unserved edge cases, like international payments between currency pairs that are not very well served. But it very quickly becomes mainstream because it's better technically and it's a lot cheaper. Yeah.
So what you're saying is now is not the time to get into correspondent banking.
I think you're probably right on that one, yeah. Or maybe now's the time to reinvent correspondent banking, would be my answer. If we end up in a world where yield can be paid on stablecoins, if for whatever reason, then that undermines the entire model of banking, because you can have USD or treasury backed or gilt-backed yield. So in other words, it's safer than deposit guarantee schemes and it's high yield. Guess what that means for the existing banking models? So I think we're at the start of a profound period. It's quite a risky one, by the way. Regulators are going to really have to travel this one very, very carefully. But the reality is I think we're now at the phase that really matters if fintech is happening now.
Same question to you, Sahil.
I wouldn't be too far away from that, Conrad. I think all the jigsaw pieces are sort of lining up. We are at a point in time where actually technology is leading a lot of customer behavior. So I wouldn't want to be the voice of the customer at this point of time, but really want to leverage all the tailwinds that technology is providing you, right? Agentic AI, if you can wrap that around together with smart contracts, come up with products that can be then offered to consumers of the future, you are really solving for a generation that has seen AI from very early on, who are pretty comfortable with the whole concept of crypto and DeFi from pretty early on. You are up to something there, right? Kind of solving for a problem statement of that nature. Again, I am particularly personally also very interested in how does agentic AI play along with smart contracts, for example. That's an area I'm pretty sure there's somebody out there already working on this and deploying a lot of resources to making it happen. I know ClearBank is doing some work around deposits and then using stable coins in that space. So that's one space I'm looking at very keenly. If an investment opportunity came up, that's where I'm putting my money.
Rajesh, I really want to hear from you because you've heard from former recognised bank, you've heard from Tide Bank, you've heard from Allica Bank. You're the, and I mentioned this earlier, you're the purveyor of the solutions. What solutions are you offering?
So I'll not go down the sales pitch part of this, although I have the opportunity. But I'll say that if I were to put my money on something, it would be on a unified artificial intelligence compatibility platform, which we can roll out in institutions such as banks. Because I'm not saying it's just banks, because like I said earlier, client intelligence is important, so you need to make sure it's communicating. It's important to say that when we move to an agentic AI model, that has to have discipline, that it is interoperable, not just between client and banks, but between the different functions and processes of the bank. Going down a model and Sidar, I guess I would definitely know this, that 30 years ago, 3 decades ago, the speech was about saying large core banking systems, mainframes, etc. that were the best. Now you're talking about composable core, right? Completely breaking down that ethos of saying what you were meant that time and now. Although the purpose is the same. And I think AI has to be rethought in that same fashion, where you say that it is a composable AI, which is able to intercommunicate, because the algorithms will do different things for different processes. And so there is no one big AI engine that can do everything. So that's important, that you build a unified AI communication protocol. And the next one would be to build layers around that, which render explainable AI, responsible AI with the least bias for all stakeholders. And importantly, from a data privacy and compliance to regulatory norms, the ability to manage data, whether it is external or internal, and how you deal with it. I think Sahil's point as well, that the combination of what you have as agentic AI and DeFi as such, as smart contracts or DeFi, is a huge opportunity. That's something that as Kiya.ai we've been working on, which is to build the concept of intelligent data tokens that are able to interpret this. It serves the need of 1, transactions, 2, auditability, and 3, the ability to sort of run these processes across multiple functions. So I would say, in a single word, unified artificial intelligence compatibility platform.
That's not a single word. Any questions from the audience before? Yes.
Good afternoon. Actually, I was listening about the AI since so long, and I just really wanted to know what are the disadvantages of AI in banking sector in terms of data security and job displacement, because is it possible that one day we don't have to come here, nobody can come here? Is it possible? Because it's like grooming grass drastically, so I just really want to know that.
Would any of the bankers like to take this?
I'll have a quick go. The reality is, I think lots and lots of bankers' jobs are going to get decimated. You think historically banks were physical things. They were physical branches and physical cash, right? these days it's people and it's data. That's all the bank is, right? And legal contracts, I guess. If you bring in the smart contracts aspect, right, there's a lot of wasted calories and they're going to disappear. I think we just need to face that fact, right? All of us need to build for that future, otherwise our organisations that we are responsible to the stakeholders for will be obsolete, right? But there is no easy way, there's no happy answer here, right? Lots of jobs in financial services will be made obsolete very quickly, I personally think. In other words, the organisations that don't react are going to go, the jobs are going to get lost the other way, right? They won't exist anymore. So, yes, the answer is going to happen.
Well, if I refer you back to some of the statistics that Chetan showed us in his quick trot round the shape of the market, those jobs are already going. Just think of the number of branches that have been shut. Anybody else?
Yeah, I have just a comment to make, because I think, yes, I agree with you that the distribution of the jobs will change within the banks, in the financial institution. I agree with you, Conrad. But I think it's something very important for us as the leaders of the banking system, financial system, and the talent of that industry is to understand that we need to get trained on AI, how to use AI, how to use it from the business side, the legal side, the information security side, the risk side, and also take all that knowledge and help the financial institutions to shape how the products will look like, how the legal operations will look like, and supervise, that's an example, and supervise those automated AI-driven tasks. Because yes, the AI agents, for example, could run, but they cannot run on their own. There needs to be somebody supervising those models and having the experience, because they have been trained on a set of data set, for example, and they learn, but they don't have the creativity or the experience that we as a talent might have to identify whether or not the answers that they are providing is accurate, and to calibrate them and to design them. So I think, yes, it's like the Industrial Revolution, the human talent skill set has to move and change to be more AI driven and data driven.
Any other questions? No? In which case we'll call it that. Oh no, there's.
I just wanted to know if, thanks to AI, if anybody has caught fraud. Any AI algorithm, Rajesh, for example, you will be able to sell and you can say, ICICI Bank has caught this fraud thanks to our AI. And just a small answer to the lady's question, MFI here thinks that anybody with a brown suit and of a different color is a criminal. So that much of bias is already built in. But I want to answer for that particular question. Any algorithm that is caught a fraud, AI algorithms.
So the answer to that would be yes.
I think, yeah,
Yes.
absolutely. So I think from there are algorithms that are meant for purpose, and I take your point on the bias part, right? That's where you need responsible AI to come in to eliminate that bias. What AI has a negative, to answer your question, is the fact that it tends to build biases. It also tends to hallucinate, and that is why there is a need to re-ascertain. Just imagine somebody, and I will take this example, which is probably not right, but let's say if you are helping someone with Alzheimer's, and say you are repeating that point with persistence, with consistency, to say this is what I meant. And if you were to repeat that to the AI engine to say this is what it is, then the AI engine will respond very well. So if you were to determine very clearly the intent, the expected response, and then the actions, the AI can perform reasonably efficiently. And I think that's where the usage comes from. The purpose of the AI should not be to eliminate humans, because it can do so many things as examination. The purpose is to serve something much more efficiently. I think that's the best use of it.
All right, we're going to call it there because I'm conscious time is continuing to slip away from us. Will you please show your appreciation for the panelists?